Welspun Corp's latest earnings are finally out. Okay, here are the earnings. The latest ones are these. Quarter 3 fiscal year 2026. We're going to compare them to quarter 3 fiscal year 2025's earnings. Okay, so total income, that is revenue from operations, rose by 25% from 3,614 crores to 4,532 crores. EBITDA increased by 35% from 478 crores to 644 crores, 45 crores. But profit after tax decreased by 33% from 675 crores to 453 crores. But that looks very concerning. However, there is a reason. Look at this slide. Quarter 3 fiscal year 2025 includes 378 crores of one-time proceeds from sale of shares of associates. So, in quarter 3 fiscal year 2025, they got 378 crores of one-time money. This was a one-time income, not recurring, not related to operations. It's a one-time income. Why they got it? Because they sold some shares of associate companies. Now, what is an associate company? So, according to Google, an associate company is an entity in which other company, the investor, holds a significant influence, typically owning between 20 to 50% of the voting shares, who does not have control. So, Welspun Corporation owns some other companies, like 20 to 50% of them, of the shares, okay, sold those shares, okay, from the sale of those shares and made around 378 crores. So EBITDA increased 35%. So operationally wise, like sales, selling products, all of that, volume of products sold, all of that went well. You can take a look at this. Depreciation only rose by 3%. Finance cost, that is interest payment on loans and all of that, decreased by 38%. That cost actually decreased. And after all of that, because of this, see, share of profit and loss from associates and joint ventures. They only got 91 crores this quarter, but previous quarter they had gotten 444 crores in total, out of which 378 was from this sale of shares of associates. Also, look at this EBITDA. Quarter 3 fiscal year 26 includes one-time cost. They had a one-time cost, according to them, it's one time, of 25.2 crores of account of some provisions, that is funds. Provisions means money set aside for a particular reason. Because of some provisions that made because of the new labor codes application. So new labor codes came, because of that some new rules came. Because of that, they had to set aside 25.2 crores as a fund to actually adjust for these new labor code costs. Okay. So quarter 3 fiscal year 26 had a new cost, which they say is one time. It's a one time cost. And quarter 3 fiscal year 25 had a one time exceptional profit, 378 crores. Okay. So what they're trying to say is operations wise, things went very well. Revenue rose very well. EBITDA rose very well. Profits would have also risen very well if not for these one time items. Then this is their guidance of fiscal year 2026. 17,500 crores of total revenue. Right now, in the first 3 quarters alone, they have achieved 12,458 crores. EBITDA, they want to achieve 2,200 crores. Right now, they have achieved 1,831 crores. So they have one more quarter to achieve all of this. Return on capital employed more than 20%, but in the last 4 quarters, so 3 quarters of fiscal year 26 and 1 quarter, that is quarter 4 of fiscal year 25, the return on capital employed was 24%. See, it's annualized, meaning 12 months are taken. Only 9 months have gone by, so they have taken 3 months from previous also. Then balance sheet overview. Look at this. Net debt. So what is net debt? Net debt means total debt minus cash and bank balance. Usually that's the definition. If it's negative, means that cash and cash balance is now more than the total debt, which is usually a good thing. Okay. So it went from 387 crores in fiscal year 24 to going now minus 1,049 crores. So cash and bank balance exceeded total debt by 1,049 crores. But in the 9 months of fiscal year 26 has gone by, it's now minus 132 crores. And it's shown here that this net debt, this 132 crores of net debt, is after a post capex of 1,722 crores. So they did capital expenditures up to 1,722 crores. So maybe in order to fund these capital expenditures, they had to take more and more debt. They had to maybe spend more of their, you can say, cash and bank balance. And because of that, the net debt amount went from minus 1,049, meaning debt was 1,049 crores less than cash and cash balance from 132 crores, which means that total debt is now 132 crores less than cash and bank balance. So that was it. That was Welspun Corporation's latest earnings. Let us see if they can actually achieve their total guidance.